What is going on, you guys, and welcome back to another video. If it is your first time here, my name is Brandon. In today's video, we are diving into a list of 5 Canadian stocks that have raised their annual dividend for at least 25 consecutive years. As we dive into this list today, you're going to note that some of these companies have well outpaced that and exceeded that, but 25 years is going to be our baseline. And to reiterate, not just paying dividends for 25 years, but growing that dividend year after year after year. And actually, if you come to know the Canadian market, there is a very, very limited selection of companies that boast this type of track record, a very, very short list. But today I'd like to share with you guys 5. It gets me thinking as I'm going through this. 25 years, that is quite a long time. I think back 25 years ago, what I was doing, I wasn't doing much. I was barely alive at that point. And I kind of question you guys, or I ask you guys, question what you were doing 25 years ago. Picture yourself then. You can even leave a comment down below. Let's go back 25 years. These companies have been paying out their dividends, and through all of the ups and downs in the markets, through the credit crisis, through the .com crisis, through the COVID pandemic, these companies have year after year still been able to sustain these dividends. It's pretty cool. It's something to be pretty proud about as a company. So let's dive into those today. If you guys enjoyed this video, please do drop a quick thumbs up, and don't forget to check out our Investing Academy. If you want courses and training in the Canadian market, that's that first link in the description below. But we're gonna be starting things off with number 5 here on our list. It's the company Thomson Reuters. The ticker is TRI.TO. And today, as of filming this video, the shares are trading for $120 Canadian. I forgot to mention actually, do stick around to the end of the video, because after we wrap up these 5 companies, we're gonna be doing a calculation, a little example calculation, just to show how powerful these dividend growers can be for your portfolio. So you don't wanna miss that. But getting back to stock number 5, Thomson Reuters, they do today boast a dividend of 1.63%, so nothing major. But this company, if you're not familiar, I'm sure you recognize the name. They're a major data and information provider. That's kind of what they would title themselves as. Over 1 billion people each and every day worldwide either read or see or consume some form of Reuters news each and every day. They also, aside from the news outlets, they provide software for professionals in certain industries like taxing, accounting, etc. But today we're focusing really on the dividends. And to jump on into that, this company has been paying dividends consistently for over 30 years, with a streak of 28 consecutive years of actually increasing and growing that dividend. This, FYI, is actually the 6th longest active streak in Canada. So it doesn't quite break the top 5, but it's one that I wanted to include on this list because you don't really see too much coverage on the internet, or at least on YouTube here, at least I don't. What I like about this company, in particular, the payout ratio today sits at 12.82%. Now, this is not always the case, but when you have a payout ratio that's significantly or quite low, and in this case, 12.82% of earnings is quite low, that can often represent that a company is able, they have some leeway and flexibility going into the future to be able to continue increasing dividends. They're not going to be too stretched. So it's not the be all end all, but it's one of the minor signs that we do like to look for. Earlier this year, they announced a 10-cent increase to the dividend. This represents about a 3% increase. Nothing major, but again, it's understandable as we move through a pandemic. This brings TRI's dividend to 40 cents per quarter, or if we want to look at that annually, $1.62. It's actually just slightly more than 40 cents, but that's what we're looking at for this stock. This is not an extremely high dividend, as I just touched on, but it is one that has shown to be quite reliable in the past, and that's the company Thomson Reuters Corp, ticker TRI.TO. Moving on to stock number 4 on our list, it is the company Canadian Western Bank with the ticker CWB.TO. Today the shares are trading for $35 Canadian with a dividend yield much higher of 3.26%. And this was a video for those of you that have been following the channel. If you actually want to go check out one of Mark's first solo videos, I think it actually was his first solo video on the channel, it did really well, where he compared the large banks to the smaller banks. He did use CWB as a proxy if you want to learn more about this company. But this is, of course, one of the major financial institutions nonetheless that are kind of a step down from our big banks, the TDs, the Royal Banks, etc. In particular, you will find this company quite apparent in areas like BC, Alberta, and Ontario. So if you've never heard of it before, it's probably because you're outside of where they operate most. In terms of Canadian Western Bank's dividend and their increases, this company has a 30-year streak and a 30-year track record of increasing their annual dividend. This is an article that was posted back in 2020, but it's one of the better ones that I came across. It states that the company has one of the longest dividend streaks in Canada, and the next closest in the financial sector at the time was sitting at 15 years. You see a really big discrepancy, and as I mentioned, there's very few companies that do hit this little mark that we're aiming for in today's video. The payout ratio is a little bit higher, but still extremely in a fair range at 36.48%. And last year they announced an increase of 4% to the quarterly dividend, and personally, I would expect them to do the same, very likely coming up in December. This leads the dividend today on a quarterly basis of $0.29. Again, we are looking at the nice higher yield based on the $35 per share price, yielding 3.26%. As I mentioned, go check out Mark's video if you want to learn more about this company. For those that did watch it, the general takeaway, not to spoil the video or anything, but the general takeaway is that these middle cap or the smaller cap banks relative to the big ones, they do tend to be significantly more volatile while still offering pretty similar returns and actually a very similar yield. So go watch that video. I don't want to spoil it, but let's move on to our next pick, and that is the company number 3, Toromont Industries. The ticker for this one is TIH.TO. Shares are trading just over $100 at $106 per share with another relatively small dividend yield of 1.32%. Now, this is a Canadian industrial company that has seen tremendous growth since it's been out publicly traded. All-time shares are up over 4,000%. I don't know if it's just me, but I personally tend to feel some hunch about me says that this stock trades in overvalued territory, but that's just me. But just FYI, this is the 3rd largest or longest streak of all Canadian publicly traded companies if we were to rank them. So I thought it did absolutely deserve a spot in today's video. For those not familiar with Toromont Industries, I don't blame you, because this is actually honestly a new company to me as well, at least kind of diving into it slightly. Company has a very outdated website. We can start with that. It's kind of old and very industrial, and it's just ugly, to be honest. But hey, clearly it's getting the job done. This is a major player in the industrial equipment and machinery space here in Canada. Their business includes a Caterpillar dealership. They offer rental operations, so if you need to rent, big pieces of equipment. They also operate under a brand called CIMCO, or CIMCO, which revolves around areas like ice rinks and refrigerations. So a little more unique in that aspect, but at the same time, very much falling into that industrial category. As for the dividend with TIH, earlier this year, they announced a 12.9% increase to the dividend. So this is something that we love to see if we're looking for that dividend growth. This company has paid dividends in every year since 1968. This dividend increase represents a streak of 32 consecutive years. As I mentioned, the 3rd largest or the 3rd longest in Canada. Pretty darn impressive. And that brings the dividend today up to 0.35%. per quarter. Payout ratio sits at 38%, which has been very consistent, extremely consistent, actually going back over the past decade, right in line, meaning that their dividend payouts are very much in line with their earnings growth. That's something that you do love to see. I have to say, this is a company that personally I do not follow. I've seen it very peripherally, seen it in the comments from time to time from some of you guys, but it's never been a company that I've ever looked into. But with a streak such as this, it definitely does pique my interest. They're actually growing quite well as a company. And as you can see from the share price up on the screen, shareholders have absolutely been rewarded with Toromont Industries, ticker TIH, trading for $106 per share. Moving along to our second last stock for today's video. In the Canadian market, it is the company Fortis, ticker FTS.TO. Shares today trade at $56 Canadian with a nice yield again up at 3.6%. And this is a company that is without a doubt a fan favorite. It's a channel favorite. It is a personal favorite. And I don't think much else needs to be said about Fortis. I've done a million trillion videos on them if you want to go search them up. But this is, of course, the utility company based out of Newfoundland and Labrador. To highlight the dividend, this company has the 2nd longest active streak. A lot of people think that this company has the longest streak because we tend to think to Fortis. That's actually not the case. Second longest active streak with 48 consecutive years of increases. So what this means is that this stock is just 2 years away from reaching that dividend king status. And a dividend king is obviously a company that has successfully increased their dividend for 50 years in a row. They're just knocking on the doorstep there, really. And what I love about Fortis in particular is that not only are you getting the 48 consecutive years of increases, today you have a nice starting yield sitting up at 3.6%, 3.60% and growing. Payout ratio, as you can see by this yellow line, or yellow chart, I guess. The yellow line within the chart, I like this visualization, sitting right at about 50%, and they are targeting 6% annual growth of the dividend through 2020. So over the next 4 or 5 years, which is what we love to see. We're actually gonna be revisiting Fortis at the end of this video as we go through a little calculation. So again, you'll definitely want to stick around for that. But given just the nature of this business, being that it's a regulated utility, it's hard to argue with. Fortis pays a dividend of $0.50 per quarter, just about a toonie, about $2 per share annually. Without a doubt, this is my favorite on the list that we've covered so far, but this last one does definitely compete with it because number one is the company Canadian Utilities. Ticker CU.TO. Today the shares trade for $35 Canadian with the highest dividend currently of our list today, 5.01%. And I'm sure our viewers of the channel, you guys already knew this one. You guys know from previous videos that we've mentioned, this is one of the most trustable dividend stocks in the world, let alone Canada. They are part of the TIH.TO group. Just as a quick background on them, you're gonna see them on the far right side of this chart. It's a company with utility, energy infrastructure, and corporate components. To highlight the dividend, you've seen this chart before. Over to the left, this is the company with the longest active streak of increases in Canada. This today sits at 49 consecutive years, so it just etches out Fortis by a year. By next year, if we film this at the exact same time next year, this company will be considered a dividend king. It'll actually be the first in the Canadian market and really the only Canadian stock that has that title. Fortis will be soon to follow. But what I love about this stock and Fortis is that you are getting the extremely reliable track record plus an amazing starting yield. Sitting today at 5%, this is the highest on our list. One consideration that should be brought up is that the payout ratio is sitting pretty high at 138%, if that is a metric that you care for with a company like this. But their dividend today sits at about 44 cents per quarter, or the equivalent of about $1.76 annually. You will note, and I like to kind of point this out, is that the increases have ramped off in the past couple of years. So you'll see the raises, they go up by about a cent or two. But as our world gets back to normal, this is actually quite standard when the economy or companies go through rough times. As we kind of get back to normal in our world, I'd expect this company to do what it's done very, very well over the past half century. They'll get back to raising those dividends at a normal schedule. But there you go, guys. Those are 5 stocks. Don't click away yet, because this is actually where I really think we can learn a lot about these dividend growers and why there's such amazing investments. If you guys, first of all, like those stocks, drop a thumbs up. I really appreciate it, and it lets me know you guys like this type of content. Also, let me know down below what of those stocks is your favorite. Maybe there's some others on the list. Well, there isn't many others that meet the 25-year threshold, but feel free to leave a comment down below. But I want to run through for you guys a little calculation on how the compounding of these dividend increases and dividend payments can totally impact your investments down the road. And I'm going to use the example of Fortis. It was our 4th or our 2nd top stock in today's video. And what you're looking at on the screen is called a dividend calculator. Now, these numbers are not going to be perfectly correct. In fact, they're not correct at all, but it's just an estimation just to kind of give you, or an approximation to give you guys an idea. In this dividend calculator, in the middle row, you'll note that I inputted 1,000 shares with a share price of $56. So Fortis today is trading around $56. Let's say we bought 1,000 shares. That's $56,000 worth of Fortis stock. We are not going to be contributing to this, so it's $0. Ignore the tax rates for now. We'll assume this is a tax-free account or whatever the case is. On the right side of this calculator, I went with an annual dividend yield of 3. Now, we know it's actually 3.6%, so this is actually lowballing, but again, this is just for explanation purposes. Expected annual dividend increases of 6%. Now, where does this number come from? the company itself, based on their projections and based on what they're sharing with us, they're targeting 6% growth. That does not mean that they're gonna hit it. It could be more, it could be less. That's what they're hoping for over the next, I believe till 2025 the number was. So it's, is it gonna be accurate? Of course, not perfectly, but for this example, let's assume that a company is able to generate a 6% compound annual growth rate on their dividend going through to 25 years. We're gonna put $0 below for expected annual share price appreciation. In other words, how much is the stock gonna go up? We're just focusing on dividends with this calculation. And then years invested, we're gonna be putting that to 25. Now, I will do a quick little math here for you guys on the screen, before we go into the results of that calculator. In year one, so if today we bought 1,000 shares of Fortis for $56, again, that's $56,000 invested, they yield 3%. Let's just call it 3%. It's 3.6, but let's just call it 3%. In year one, so today, we would generate about $1,680 in dividends from this position in year one. On a $56,000 investment, with a 3% yield, we're popping out $1,680 per year. Not bad, not great, life goes on. Let's see what this calculation shows us and where the magic of these growing dividends can really come into play. Because let me reiterate here, in this example, you did not touch your investments, you did not add more, you simply reinvested dividends and you let the growth come from these year after year increases. As you can see highlighted in the red box, 25 years later, your exact same Fortis position is generating you $38,627 in dividends per year. That is your annual yield, or the annual dividend income that you are receiving. And this does not include the capital appreciation, okay? Again, we put $0 here for our expected share price appreciation. This is solely looking at the dividends. And over on the far right, you're gonna see yield on cost, which we talk about from time to time if you do care for that. Essentially on a $56,000 investment, what you are yielding 25 years down the road, a 68.98% yield on cost, meaning you are yielding 68% of your original investment because each and every year those dividends increase. Now, if you were to hold this longer, you will certainly end up earning over 100% yield on your cost or on that original investment. This is again assuming you didn't do anything for it. And I hope this goes to show you guys why this is such a popular strategy and why being able to see down the road and see forward, people in the stock market see so short-sighted. They trade this or that over a month or 2 months, but the real money is made when you're able to look out 25 years, 30 years plus, and allow your investments to compound year after year after year. From year one, to reiterate, that's $1,680 in dividends. 25 years later, those same original investments that you bought, $38,627. That is just mind-boggling to me. Again, obviously, this is a ballpark estimation. This is assuming that a company is able to grow at 6% over that period. Heck, you may come into a company that grows above that. Heck, maybe Fortis underperforms and they are only able to grow their dividends by 4% over that period. It all depends, but hopefully this calculation has at least shown you guys why people put such a high priority and why they put such a high emphasis on these dividend growth stocks. And of course, today, these are just a list to share with you guys, 5 of the top ones in Canada. That doesn't necessarily mean that they're gonna provide you with these types of returns, but I just want to showcase them for you. Often companies that have done well in the past, that have been able to prove, especially these more reliable companies that have done well in the past, hey, you'd hope that they're able to do that going forward. But yeah, if you guys enjoyed today's video, again, I would appreciate it if you did drop a big thumbs up on the video. If you're not already subscribed to the channel, hit that subscribe button because we post videos each and every week. If you have some dividend stocks here in Canada that were not on this list that you feel are gonna be ones that you will hold and compound for years and years and years to go in the future, leave them down in the comment section below, share with the others, share with myself. As always, we do have our Investing Academy. So if you are wanting to learn more about this and learning more about portfolios and stocks to buy, or just anything, maybe you're just a pure beginner that wants to learn the stock market, click the first link down below because that'll take you over to our Investing Academy website. You can learn all about that. But as always, I thank you guys for watching. I hope you enjoyed today's video and I'll see you in the next one.